good, everybody? Welcome. Happy Friday. Welcome to the closing beat. Hope you're having a good day so far. Well, you see the market's having a little bit different of a day here. So we'll go over all of that. My name is Dustin Tibbetts, financial advisor with Jazz Wealth. We are fiduciary financial advisors, now SEC registered. Happy about that. Very happy with that. We manage our own portfolios. We've been actively managing our portfolios here lately. And of course, all that's available to you on the website. This is just an update show where we do to cover the markets. I don't think I've ever said actually what's up at the top. That's going to be your major indices, your bonds, commodities, and global markets. So as it scrolls around, you'll be able to get a quick look at each little category there. We don't always have something to say about, well, bonds lately, obviously our markets, commodities as well. But we don't always have something to say about the global markets, but you might want to take a look up there today. Also down at the bottom, we've got some different sectors of the stock market and some notes and junk that maybe you won't hear on the media or financial news today. Well, the stock market's a bit of a wild ride today. This chart over here down to your right is kind of giving you an idea of what happened through the day. Now the red dashed line down there at the bottom, that's where we finished yesterday. So in our class last night for our customers, we were pointing out that the stock market was already higher during the evening. And so we were looking for the markets to open higher today. And look, it did open higher, but sold off almost back to break even and pretty much touched break even where it found some support and then spent the rest of the day trying to rally back. So quite a wide range actually for the stock market for a Friday. I will say, although you can see what's happened here with the Dow, the S&P, and the Nasdaq for the day, ask yourself this is why today's kind of interesting. After what happened this week, do you think the average investor was thinking, yeah, I'll buy stuff on Friday and take the chance of there being some kind of news over the weekend? Normally, when there's an aggressive sell-off, here's what happens. I'm telling you, just go back and look. When there's an aggressive sell-off, the market's finished near the lows for the week. And that's because maybe it was political news or something around the world that caused the stock markets to fall. Go back and look at Brexit, look at Italy, Greece when they had their mess. When you look at Argentina, and every time these things come out, when there's some sort of news, people go, I'm not going to take any risk over a weekend because you got Saturday, Sunday, all of Monday morning. Who knows what could happen? And so usually the stock market stays muted at the lows because, nobody wants to take any risk. So today actually had people thrown off, which I told you about it yesterday, exactly what would happen today, and so far so good, or that's what happened. So most people thought, yeah, the banks would actually, probably help support things. Actually, it was a little wobbly for a little while there, but that people would most likely just not do anything going into the end of the week. And so today to have the markets close where they did, more importantly, look at the Nasdaq, to have tech stocks be up as much as they were, that shows people's risk appetite hasn't changed. So you can look at the media, you can watch things happen, but at the end of the day, we just have to figure out what people are thinking, right? So, I use the charts and you see candlesticks and you see the moving averages and stuff, but at the end of the day, we're thinking about what's going on and what people are thinking. And so to me, the fact that people, I'm gonna go over to the charts real quick here. The fact that people were willing to go to that tech sector, and it was the best performing sector, right? So that's the high risk, high volatility, high growth area of the market. Well, it has been. And so the fact that people were willing to take that risk into the weekend, that should really show you that people are buying the discount, right? Because if you were scared of the markets, right, and everything fell this week and you were really scared, where would you go? If you were really scared, you'd go to consumer staples. If you were really scared, you'd go to bonds. If you were really scared, you'd go to gold, right? Nobody's doing that. Well, the people did, but the majority of the people went back to the high-risk global or high-risk growth stocks there. So pretty interesting. I'm not saying that means there's a bottom or anything. You actually probably will not see a perfect V bottom take shape there. It'll probably take some time to kind of, fit and start and go back and forth and all that stuff. But that was one of those little things. If I can point out a little something to you, to me it's a big deal. So anyways, there's the Dow on the screen. You got the Nasdaq recovering the most, had the best move on the day, over 2%, 167 points on the Nasdaq. The S&P 500 also rallied as well, got you about 1% back. Broad-based, if you take everything as a whole, the markets recovered about a quarter of what they lost throughout the week. So it ended up being on the Dow, S&P about down 4% on the week. Which is like, whoa, that's a big drop, but it's not as bad as it was if you're looking for a bright spot. in there. Okay, we'll take a look at the banking sector here. Banking stocks were barely up on the day. This was interesting too. I won't go into it, I guess, but you had a lot of back and forth in there. We've been mentioning it all week. JP Morgan, Wells Fargo, Citigroup, all reporting earnings, and something really interesting, which I'm going to track going forward for you. Give me a second. We'll talk about it. So bank stocks up a little bit. The most important thing here is if I zoom in, if you're familiar with candlesticks, they closed off of their lows. You didn't want to see the banks close near their lows today. That would have been an indication that people, again, don't want to take risk into the weekend. They're nervous about what next week holds. We came off of the lows today, so a little positive there for banks. Now, if we walk through the banks one by one, you got earnings coming up here. Maybe I'll switch. This seems a little bit slow. So you had earnings come out, JP Morgan, Wells Fargo, Citigroup, and JP Morgan's earnings were better than expected, right? So came in better than expected because earnings and revenue topped their expectations. They said their consumer business was actually really strong. I don't think anybody expected that, but they didn't have anything really exciting to say other than we beat. Everything was great, you know. There wasn't anything there, which is why I said yesterday, watch the CEO try to push the trade war conversation back into the media. He did just that today. He pushed the whole conversation, just like I said, back into the media, but the media didn't bite. They went after the interest rates because what was hot this week? Bonds, interest rates, right? We were all talking about this move, so they chose to ignore the trade war comments. I think he'll try again if I had to be a betting man on that one. So let's see what next week holds from Jamie Dimon there. The really important thing, the takeaway for today, if you're paying attention, I guess there's nothing really to see. Citigroup was higher by 2% today. They reported earnings. Earnings came in better than expected. Everything was good. Here's what they said. Pay close attention here because this is going to go right into what I said yesterday. Their bond trading was one of the bright spots, one of the reasons why their earnings came in so good. Think about it. Bond trading was good for them. Who trades bonds with Citigroup? Do you walk into the big building and go, I'll take a few bonds, right? No, who does that? Nobody does that. So who does that? The big funds that are moving from stocks over to bonds, Citigroup, right? Now this is just getting started. So yesterday I mentioned this. This of course is of last quarter. So notice that already bond trading is creeping up. I hope you hear this because when you see the markets fall and then you see bonds prices rise, now you can verify that it's actually moving over there. We're starting to see it in the earnings report. So Citigroup said, yeah, bonds trading is picking up for us, which is all the target date funds, all the long-term goal-based funds moving back into bonds. So very interesting. I read that and I'm like, aha, I was right. I saw it. So next quarter, you have JP Morgan, Citigroup. I don't know if Bank of America is so much in there. Morgan Stanley will be in there. If they mention bonds, let's take a look together and see, did their bond activity really pick up? And that'll be confirmation that what we were talking about actually happened. I don't need confirmation because I showed you guys yesterday exactly how to tell, but still cool to see so people, you don't think I'm just making this stuff up. Anyways, Wells Fargo was the other one to report earnings today. Hey, this is another thing I said. This earnings season is going to be revenue based, right? Because margins are going to tighten up. And if the company can show more revenue, then nobody cares if their profit margins are smaller. If you were making 10% net margins and you had X amount in revenue, okay, fine. If you now have 8% net margins and your revenue goes up, right? Okay, that's not so bad. You made more on a little less profit margin. Isn't it kind of a wash? Depends on how much it is. So Wells Fargo came out today and they said our revenue was better than expected and we cut costs, which helped us keep our margins where they are. So Wells Fargo was able to bring in more revenue somehow. I don't know, people giving them a second chance or a fifth chance. But the margins came in better than expected too because they cut costs as well as increased their revenue. So really fascinating if you follow that sort of thing. If you're not interested, then I wasted your time. They also said, by the way, transformational changes that they're making are helping them improve their business, which shows in their numbers there, and that they're going to continue to focus on cost cutting and improving brand image. If they could do that successfully, then hey, good job. That means, maybe that they'll do well for a change. One bank that didn't do well today, PNC Bank. If you follow these guys, it's a regional bank. They're more focused in the lending category. 5.5% decline today. Loan growth one of the big things that's come out with these banks is their loan growth, not the refinancing, but small business loans, right? That they're giving out, new purchase of home loans and things like that. So that's been growing for the banks. JP Morgan saw 6% loan growth. Citigroup saw 4% loan growth. Oh, I remember this stuff. Citigroup saw 4% loan growth. Well, PNC Bank, I wrote it down because I don't remember this one, 2%. They only saw their loan growth by 2%. Everybody was expecting a lot more. More importantly, PNC Bank said, hey guys, going forward, we don't expect that loan growth to pick up. So they're essentially telling you there's something wrong with our sort of environment right now, and we're trying to address it so that we can improve our loan growth and get more customers. We don't know what it is just yet, but so that stock pretty beaten down today. Snapchat, a little bounce on that one today, 5.5%. That stock, believe it or not, you see it on the charts. It's at $7.18. Got a 5.5% bounce today. You go, Dustin, is it a good buy right here? Still overpriced. That's simple. It's an overpriced stock. General Electric down 3% on the day. Hey, they delayed their earnings. You can't do that. Well, I mean, you can do that, but you shouldn't do that. So they got a new CEO, Larry Culp. You guys all know about this by now. He came in and the company said, hey, let's hold off our earnings so he can have a better chance to review the business. That's a bad idea because he wasn't there and whatever happened in the past does not affect the earnings that the company had. So people were like, why? That doesn't make any sense. Why would you do that? Stock fell 3% today. They paid a little price for that. I see the comments there. Tesla, you got 2.5% up today. Look, I'm not telling you what to do here, but from a technical perspective, the people that like to follow charts, let me paint a quick picture for you. The stock fell. Can you see? Yeah. Stock fell over here rather sharply. What happened? People came to buy it. They were unsuccessful, and that's okay. Stock fell again. What happened when it fell? At some point, V bottom, meaning it looks like a V, and people came to buy the stock. Okay, no problem. Stock falls again. A lot of news in there. We understand that. What's happened all week? Nobody's come to buy this stock, right? Look at every time, right? What happened? At least a little bounce, a little something. Nobody has shown up to buy this stock at this 250 price level. If we all believed that 250 was really the optimum support for this stock, would people not show up and start to buy this stock? So if you're thinking about or you own this stock, you've got to be very, very nervous at the fact that nobody came to buy the stock all week. I mean, granted, he's not tweeting, Musk isn't tweeting as much as he has, but it's got to make you a little nervous there. So if you're at you're looking at Tesla, I would be very nervous about that, right? Nobody showed up at all. So very careful, very careful. What else here? Netflix, I know that's a popular one with you guys. That pulls itself out of a bear market. It was down 10%, is now up, from here. Now up 5% from there. Take-Two Interactive, I sort of cheer this one on for one of our customers. We don't participate like in our funds. One of our customers has it. I want you guys to do well, so I'm glad to see that one higher today. Great reversal, by the way. The way it reversed itself today makes you a little bit more confident than some of the other stocks out there. Another one that looks like that, Activision Blizzard, also cheering that one higher. Look, growth stocks, Salesforce.com, people came back to that. Nvidia, people came back to that. Adobe, people came back to that aggressively. Square, people came back to it. 7% gain on the day. So you get the picture here. If people are really scared about the market, wouldn't they be going buying other cautious things? Now there are people doing that, but by the masses, it's like people are willing to take risk after just this quick couple days down. So Henry, would you ever consider working on the New York Stock Exchange? There's no place for me there, I'll be honest. No, Chicago. I'd go to Chicago, Henry, if my wife would go. She's not gonna let me go. Amazon, yeah, good day for Amazon. What was it, 80 points, 67 points? Amazon, big growth stock, 69 points back on the upside there, 4%. So again, it's like a lot of these growth stocks, people coming back into the game there. You warned us that Facebook is down to, let's see, where is it at there? Got to 150, yeah. I mean, that's of course, we mentioned that weeks ago. Yeah, you'll probably see it at 150, but you can't really blame it. If the market's had that bad of a couple days, I think it's actually pretty impressive that it held right there. So 150 is the magic number. Again, I don't know about 140 unless the markets sell off. I think everybody's happy with 150 at this point. That's your support area for Tesla. I mean, for Facebook. Sorry, I'm reading the next thing there. Cool. Bought Apple on a cheap. Enjoyed the bounce today. Good, good. I actually didn't look too closely at Apple, but if you follow that stock as a whole, you're pretty impressed, right? I mean, it fell a little bit, but that stock's basically, nobody wants to sell it. So is that old Warren Buffett adding more to his shares? Remember what happened in February? Watch yesterday's video. If you got scared of this market this year. Yeah. I'm cheering square for you. I know you got it. Yeah. Good. We'll see. Alibaba, decent bottom. So, hey, this is a great example. I'm not, like I said, I hate to go back and say, I told you it'd bounce or whatever. But when this downtrend, we've kept you away from it. We've talked about not investing in it until the waterfall drop. You got the waterfall drop. I think we mentioned it Tuesday or Monday. So I'm happy with that. Oh, I'm not on the thing there. Alibaba, I'd have no problem with. I would think that it would continue to bounce from there. JD is not the same picture, by the way. Mentioning JD there, that is a steady downtrend. You don't try to pick on a steady downtrend. Alibaba is a more of an accelerated rapid decline. That shows fear, that shows rapid change in direction. You can look at that one. JD, that's a consistent downtrend. There's a very steady and strong downtrend on that one. So there you go. Their market is the Chinese market. Don't give up on that one. That one is exciting. So let's see here. Anything else before we wrap it up? MNGA. Nope, won't talk about that one. Don't mess with that stock. I did a little bit of Apple diversify myself. Nice. Okay, so yeah, going into next week, what do you expect? What are you supposed to expect here? Here you go. Now, play back to February in your... Oh, can I go back to February? Maybe I can just do that. Oh, look. So as we went into February earlier this year, stock market fell sort of like it did before. Right here, this recovery, you expect the same thing to happen basically, but it's a little less aggressive. So notice how it did not just recover and take back off. There were a couple days where it went back and forth, and then it started to recover. I honestly, and I said it back in this video here, I do not expect the markets to recover everything they lost. They did. I was 100% wrong on that one. 100%. In 12 days, this finished its decline, and it took that long to recover. That was impressive. You absolutely do not look at this decline right here and say, oh, okay, so we'll bounce. Maybe Monday we start lower and wiggle around a little bit. There's a scary day in there or two, and then we recover. I don't think so, guys. I'll go on record again saying that doesn't happen. You don't see a drop like this just recover magically as if it never happened. Now, if you wanted a reason why it could happen, earnings season. 100% earnings season, you could definitely see stock after stock after stock report that revenue is good, meaning the consumer is still purchasing their products, and even though the margins have tightened up a little bit, you know the drill. You could see everybody get excited again. It would be highly, highly odd and unusual for that to happen. Happening in February like it did, very rare. Look at this over here. When this market fell aggressively, look at how it's 1 or 2 days wiggling around. It did exactly what it did in February. I hope you could see that. It is the exact same day-to-day move that it did in February. However, look how long it took to recover from all that. That's what you're working with here. So you're really looking at a month and a half, 2 months at best before we could, if we go back to these highs, it's probably going to be a little bit longer. I would anticipate longer. So for next week, my honest assumption is I think we're going to see this back and forth, just like you see right here and just like you saw in February. No reason to expect otherwise. I do not expect that next week we just rapidly head back up and everything's fine and somehow we forget about it. That would be very odd. I'll take it if it happens. I would love to be wrong, but I don't think so. 10 cents still in a downtrend. Yeah, and I saw they delayed their music IPO. Did they not get it out there? Yeah, they delayed it. They definitely delayed it because of obviously the weak market. So if you follow that sort of thing, maybe next week, but it seems like it's going to be at least 2 weeks on that one. You're buying a house and this drop made you nervous. You should probably have your rate locked in, huh? You all locked in so you don't have to pay a higher rate? Nice. Teva, haven't looked at that one in a long time. The problem with Teva, if you follow Teva Pharmaceuticals, is it's so unpredictable from a chart perspective. You just, if you either believe in them or you don't, because from a chart perspective, you think, oh, it's support, I'm going to buy here, and it whips you right out of that trade if you happen to be an active trader. I'm not a fan of Teva. Most biotech stocks I'm not a fan of, to be honest. I think the Fed does continue their interest rate just like this, like nobody's talking to them. Yeah, they have a game plan. They're not going to change just because someone disagrees with them. Look, I mean, there's people that disagree with me, right? I just come on here and talk for a little bit each day, and people disagree with me. That doesn't mean I'm going to change what I'm doing. Same thing with the Fed. They're like, okay, President, you know, we hear you. And don't think they don't talk, by the way. The Fed, if you look at the history of this, the Fed has a daily history of talking with the President of the United States going as far back as I've ever studied, which is by the time, you know, to my, you know, generation. So they talk all the time. The media playing the games, just drawing up fights and stuff. It's weird and it's sort of odd. By the way, did you notice how the media changed all their graphics today? CNBC in particular, I only got a second of it, but they went from, remember all week it was like red and scary graphics all over the place, and today it was yellow and it was like sort of gold and sunrisey. So they do that, just, you know, gets the eyeballs, right? They know how to get the eyeballs. I can't fault them. If I could grab the eyeballs, I'd do the same thing. All right, I think that's about it. Oh, thanks. Appreciate the good comments there. Hey, it's Friday, so you know what that means. Back to work. So I'm going to wrap it up for the week. Thank you guys so much for watching. If I helped you in some way, hit the subscribe button. So many big things for me that I'm going to do for the industry next year, and where I'm going to be talking to people that are in the finance industry. I want to show them stats from this channel. So I know you've heard me say it a million times. If I've helped you in any way, hit the subscribe button. You don't even have to turn the bell on if you don't really want to pay attention. But if you could put the number there, it just shows. I'm not interested in the subscriber count. I'm interested in the data of the people that subscribe. I'll be honest with you. That's what I want. So when I go give these speeches, I want to show the people that watch the videos that matter to their long-term investments, and working on a whole deal there. So if you would hit that button for me, and then we'll see you next week. Next week, by the way, the Doe Show. I just came up with this right now. Next week, the Doe Show is going to be all about trading. So I'm going to try to have a weekly focus each week for the Doe Show. We might do retirement investing. We might do credit cards. We might do credit scores. Next week is trading. So a topic every day, and we'll cover it on the Doe Show live at 1 o'clock, provided no other hurricanes come through town. And enjoy the rest of your day and weekend. See you then.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new FinTips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.